Hey guys, it's Ted Bogert. Welcome to Monday Mortgage Update, Mortgage Monday Update. I'm here with the talented and great-haired Andy Fulton, president of sales at Future Home Loans. Today, we'll talk about how to attract more buyers on our update. Good morning, Andy. How you doing?
I'm doing great. Good morning to you too, Ted.
Super excited to have you back. I hope you weathered the storm. We hope all of you weathered the storm. Still a lot of cleanup here in Orlando. Crazy times, but the community's coming together. So super good stuff. All right, let's take a deep dive. Tell them a little bit about you before we do, just who you are and a little bit of your background for those joining us for the first time.
Sure will. Thanks, Ted. Again, I'm Andy Fulton. I'm the president of sales for Future Home Loans. Been in the business for 25 plus years, worked most of my career out of the Jacksonville, Florida market, but I'm now responsible for the entire Southeast and Texas markets that Future Home Loans exists in today.
Fantastic. And he is one of the smartest guys on the planet that I know as far as loans go. He's got that finance brain, guys, so you definitely want to tap into that. All right, so every week we're going to talk about something in the mortgage world. We want to give you all, our realtors especially, tools, and our consumer tools to know how to maneuver through this market, ever-changing market. So today we're going to talk about how to attract more buyers. So this is very realtor related, but it's a good thing for everybody to know. So let's talk about it. So that's on everyone's mind, right? The inventory is a little bit better than it was. But, you know, everybody's kind of in that listening to the mainstream media and the sky is falling. But there are ways for us to find more buyers. So Andy, impart your knowledge on us, how we can do that.
Yeah, I think everybody that's watching this show today is already realizing that the market is more of a buyer's market today than a seller's market like it's been for the last few years. There's a couple things that you got to adjust, right, to be successful as a realtor. One is just sales activity's got to go up, right? You're going to need to probably spend more time doing open houses, probably spend a little bit more time on how to effectively list properties and market properties today as opposed to what you had to do maybe 8 or 9 months ago. But that doesn't mean that it's too hard to sell homes. Actually, I think we're in much more of a normalized housing market today than what we've been in recently. And normalized is an interesting term. I don't know that the housing industry has been normalized for the last 15 years. But the reality is I think it's normal for a home to be listed for 60 days in this market now, and maybe even longer. So the real trick to this market right now is bringing people back into the buyer side of the market. And I think one of the things that is crystal clear impacting the number of buyers that are in the market really is the cost of financing, right? Interest rates are up quite a bit from where they were this time last year, but they are still competitive and they are still worthwhile looking at, right? When you look at the historical trends of interest rates, where interest rates are today as opposed to where they are at their highest points in the 70s and early 80s is nowhere near. It's a third of what those rates were. And really, most people thinking about buying homes right now, they're evaluating what their options are. And for that big millennial generation, the real big evaluation is, do I want to continue to rent or do I want to invest in a home that's mine? And I think most want to invest in something that's theirs. And many might be sitting kind of on the sidelines going, well, maybe rates will be better in another month or two, or maybe 6 months from now. And the reality is none of us really know. And so what I would recommend to realtors is to really discuss with their clients that are listing their home is how to create more interest in their home. And one way to do that is offering seller credits. And there's really two ways that I encourage sellers to consider kind of positioning a seller credit, right? Both are targeted towards the same message. And the same message is if you buy my house, you're going to end up with a lower cost of finance than if you buy someone else's house. And the two different ways to do that are, one, just offer a basic seller credit to buy down an interest rate, right? All of us that own a home that have to have a mortgage when we bought our home, or if we refinanced it, we had options to pay points to lower our interest rates. And there's a lot of evaluation that goes into whether that's worth it or not. But if a seller's going to pay money towards points to lower an interest rate, there's really no evaluation in that perspective from the buyer. That is an immediate value add and benefit to buying the house. The second way to do it is a term that you may be hearing thrown around right now in the market, and that's called buy downs, mortgage buy downs. In a general buy down, that program, it's a basic 30-year fixed rate mortgage, but the first 2 years of that mortgage, the interest rate is much lower than what the rate will be for the rest of the term of the loan, and it's fixed for the entire life. A simple way to explain this is you'll hear the term 2-1 buy down. That's probably the most common buy down term you'll hear, 2-1 buy down. So let's just say the market interest rate, the APR for a 30 fixed mortgage might be, let's say 7% in our market right now. That's a very generalized quote. A 2-1 buy down means the first year is going to be 2% lower than that fixed rate. So your first year will be a 5% effective interest rate on your payments, APR. The second year would be a 6% effective rate on the payments. And then for the rest of the term of the loan is a 7% interest rate. And without getting into too much detail how that works, the bottom line is if a seller really has the motivation to want to sell their home quicker than the way it's selling right now, they can offer a seller credit to pay for the fees up front, or to really build the account that creates that buy down on that program. To learn more about that, that's what we do. So you can reach out to Ted Bogert. Ted will get you in touch with our team, and we'll really help you with it.
I know one of the questions, thank you. I literally sat there listening to you because that's the kind of stuff that's fascinating. It's also the kind of stuff that our realtor community needs to hear, that there are options out there, and that because of the normalized quote unquote market, you really do have to now think a lot differently, go back to basics and learn some of the options that are out there, which is what Future Home Loans does such a great job at, is educating. Super important for the realtors to be educated, because then that way they have more tools in their arsenal. What do you say? Something like that. Because it's a competitive market. It's gotten even more interesting, and you have the people who are saying everything's slowed down, and then you have people who are saying I'm busier than ever. And the difference obviously is in what they're doing with the database and with their sphere of influence, and having these kinds of tools is just so critical for them. Is there anything different on a 2-1? Any extra qualifications that they have to have, without getting into detail? Because I know that's going to be a question. So is it a basic? Are there other guidelines? Are there things that the buy down requires that the borrower has to qualify for?
Yeah, good question. And the answer is no. In fact, that answer is no on both of those scenarios, right? A 2-1 buy down is a very specific program type, and there's no extra qualifications for it. But just a basic seller credit to go towards lowering an interest rate for a client, those are permanent buy downs, right? A 2-1 buy down is very temporary. It only impacts and helps the client or the buyer the first year and the second year. What I refer to as a permanent buy down, I think, is a much better solution. That's just simply the seller offering some level of credit to the buyer. And I would typically put that credit in terms of percentage of the loan amount, right? What percentage of the loan amount would the seller be willing to provide towards buying down the interest rate for the buyer? That is a buy down that's permanent. It's for the life of the loan, right? Buyers can pay points, either fractional points or full points, and a point is a percent of the loan amount, to buy an interest rate down and have a better interest rate for the life of the loan. And if a seller is willing to invest in that to create additional motivation for somebody to buy their home, I think it's a really, really strong sales tactic.
I agree. I think it's, again, something that realtors need to familiarize themselves with. And of course, I would love for you to reach out to me anytime. Future Home Loans does so much great work in education. And that's the thing that we're really focusing on, is educating our realtor partners and the consumers on what's out there and what's available, and some creative ways that you can get into the house or let go of the house that you're in. Andy, thank you so much. Every week, it's so informative. I'm learning alongside. Anybody who knows me knows I'm learning alongside the people out there listening to us today. And so I appreciate you sharing your knowledge. We'll be back every Wednesday. If you ever have any questions you want to ask me, and I'll ask Andy, we will get them on the show every Monday we film. So just message me. Thanks, Andy, so much. Thanks, Future Home Loans. And thanks to our realtor partners. We pray you guys are all safe and sound after Ian. Thanks, Andy.
Thank you, Ted.
All right, guys. We'll see you soon. You see my website scrolling across the bottom there.